Good day. Thanks for taking the time to watch this video. My name is Matt and I'm going to take you through our investment idea for Prosus and Naspers. This investment idea is quite unique compared to the other reports we've done because we go into quite a lot of detail into Tencent, which is the primary driver of our Naspers and Prosus valuation, given the significant size of the company and the Prosus stake. In this presentation, I'll briefly touch on a few points, but you can find the full report on PSG Wealth's online trading platform. Let's have a look at the business structure of Naspers and Prosus. In 2019, Naspers changed the arrangement of the company significantly by restructuring the international assets into a separate company called Prosus, which was listed on the Amsterdam Stock Exchange with a secondary listing on the JSE. Naspers owns approximately 73% of Prosus, as well as some local South African assets, Takealot.com and Media24. Prosus owns about 31% of Tencent, which is where it gets the majority of its revenue and earnings from. It also owns a couple of international e-commerce assets with a focus in food delivery, payments and fintech classifieds, and these assets have historically been exposed to emerging markets. At a very simplistic approach, if you buy Prosus, you buy Tencent plus the international assets. If you buy Naspers, you get Tencent through Prosus, the international assets plus the South African assets. And we'll get into more detail later, but the local assets are so small that we value them at zero. So let's quickly discuss Tencent and its valuation. Tencent's a Chinese tech company. It's listed in Hong Kong and it's got a market cap of approximately $535 billion US. It's mostly known for gaming, where it has stakes in some of the world's most popular games like Call of Duty, Fortnite, League of Legends, Clash of Clans, PUBG. It also owns a number of social network platforms like WeChat, which is pretty much like WhatsApp except it can do a whole lot more. So for example, it's got its own search engine, it has news feeds, WeChat's got an e-wallet, WeChat Pay, WeChat Loans. You can even use it for booking movies, taxis, flights, hotels. There's more details in the report, but essentially it's an app for everything. And the best part about it is that it has over 1.2 billion users, so it has a large network effect and it dominates the mobile time spent by Chinese internet users. Tencent's also got a fast-growing business and fintech division. So all in all, Tencent's a company that is positioned perfectly to benefit from long-term trends. The human race is becoming extremely productive, so I think generally people will be spending more time at home and engaging in more non-work related activities, and gaming is one of them. The world's consuming more, and so more transactions are taking place, and in addition, these transactions are increasingly using less cash. And then as people consume more and are less brand loyal, the value of online advertising increases. And the winners of online advertising are those established companies with huge user bases and strong network effects. Then financially, Tencent's got a strong balance sheet, and the COVID-19 pandemic has reminded us why it's important to favor companies with strong balance sheets. And then lastly, we do think that the online advertising is relatively under-monetized. So Tencent's a great quality company, and of course it's not cheap. It's currently trading at about 30.6 times earnings, which is slightly above its long-term average. We value Tencent based on its peer multiples, and we think that a fairer value for Tencent is at about 28.4 times. So this is a more conservative value for Tencent, and this is the value that we use when we get to our valuation for Prosus and Naspers. So here's a graph which shows the discount to net asset value for Prosus and Naspers since the Prosus unbundling. Before Prosus was unbundled from Naspers, Naspers had historically traded at a discount to its net asset value, and part of the reasoning for the unbundling was to reduce that discount. Unfortunately, the move was largely a failure, and it introduced the double discount that we can see here. Naspers now trades at approximately 43% to net asset value on a see-through discount basis, and Prosus trades at approximately 23%. Given that management is determined to closing this discount over time, we could potentially see further value unlock for shareholders, and there are a number of ways that they could do this. Number one, reversing Naspers into Prosus by issuing Prosus shares for Naspers shares. Two, Naspers could sell Prosus and use the proceeds to buy Naspers shares. And number three, although it's unlikely, they could separate the core assets, so that would be Tencent, from the non-core assets in a structure where shareholders have the choice of holding or selling Tencent and the non-core assets. So we've upgraded our valuation from underweight to neutral, and for Prosus we value all of the listed assets at their market value except for Tencent, which we value much more conservatively and derive our value based on peers. This is what I was referring to earlier on in the presentation. We do, however, show how our valuation for Prosus changes if we assume that the market has priced Tencent correctly. So this is shown in the rightmost column. So for Prosus, after applying a 25% holding company discount, we estimate that the fair value should be somewhere between 1,250 and 1,435, and currently it's trading at about 1,410. For Naspers, and this is the see-through discount, we firstly exclude the South African assets because we value them at zero, and then we take our own fair value estimate of Prosus and our value of Prosus if we assume that the market has priced Tencent correctly. We apply a holding company discount of just over 36% to get a fair value between 2,800 and 3,230. And it's currently trading at about 2,910. So at current prices, we think Prosus and Naspers are right in the middle of where we think they should be. They are great counters which diversify funds away from South Africa and into international emerging markets, particularly in Asia. They give you great exposure to a high quality company through Tencent, and as a long-term choice there are some great prospects. Bear in mind that our valuation is also influenced by the exchange rate, where a weaker rand increases the value of Prosus. But there's more information about that in the report, and I remind you that you can find the full report on the PSG Wealth online trading platform. Thanks a lot for taking the time to read our report and watch our presentation. Before we end off, I'd like to remind you that if you'd like to place a trade, please speak to your financial advisor or contact the trading desk. And then lastly, please take note of the following disclaimer. Thank you.